Hi, guys. This is John Logan. Tom O'Brien's off today. I'll be doing his show for the last hour here, and we're going to take on a couple of things that are going on with the markets today that are just really, really volatile situations, and we're going to try to make sense of them and try to figure out how we're going to prepare for tomorrow. I usually do a show in the morning from 8 to 9. It's called the Global Market Pulse. You're always invited to join us then. And I'm currently sitting back in North Carolina right now. I've been in Asia for a couple of months, and I've been on a road trip this weekend to get back here. It's just amazing what the airlines put you through these days. But glad to be back and good to be doing Tom's show here. Tom will be back next week, and we're going to go over, first of all, something that seemingly is on everybody's mind here, the Greek situation. A lot of rhetoric this afternoon, some new talks, possibilities of repair strategies here. Don't know if that's actually going to work out, but we're going to try to make some sense of the technicals around the euro. And if you're in the Tiger's Den, we're looking at our first chart with the euro USD cross here. We had talked pretty religiously about trying to leverage on the short side around that 112.25 area. And why has that been the case? That's been our daily unfair highs on our former profile before we started caving in the past 5 or 6 days. And we always talk about it's okay to take small losses to get stopped out. Let your profits ride. Those are easy to say things, but it's, as a trader, you've got to basically, in my opinion, stay with that mantra all the time. We always talk about lose a little, lose a little, lose a little, make a lot. This is one of those situations where we got stopped out of the euro a couple of times past month or two on the north side. I've been a big fan of going short this product for a long time, but as soon as we started showing some conviction and staying below that 12.25 area, there's been really zero reasons to get out of that trade. I'm still a big fan of that. Right now, we've got stops ratcheted at this stage, even lower. Excuse me. Short-term stops were above 109.84 on this trade. We've kind of hit those for the 240 profile regulation of the trade down, but we're also looking at a little bit longer-term stops kind of staying in the trade above 110.91. So still, in my opinion, still the waters are pretty safe here on the short side on the euro. I did a Bloomberg brief on this particular topic that was published a couple of weeks ago. I'm showing our long-term view here. I have to do the literature when we go to get these things published on more longer-term views, because the seemingly every time we do a short-term view, it either happens and then they publish it late within Bloomberg, and I look like I'm Monday morning quarterback. So we did a little bit more of a long-term view paper on the euro, and that 114.67 area was the kind of the target-rich environment on the short side, maximum resistance selling that we did that article on, and that was 400 or 500 pips ago on the north side. So, we're real happy with the way this thing's working out. I think it's got a lot more downside to it. It's not going to go in a straight line. We've reached some short-term targets. We talked about 109.48 this morning on the show. Had to talk about that as, might be able to take some weight off here. And those are predicated, or those statements and ideas are predicated upon our weekly unfair lows. I think we've got a caller, Tony in Orlando. Tony, are you with us?
Hello, is Tom O'Brien seeing a psychiatrist?
I have no idea. I hope he's not seeing one, but what's on your mind, Tony? Hello? We're going to go move forward. I don't know what happened there, but Tony, have a good day. We're going to continue to take a look at the euro on a long-term basis, continue to keep talking about it, because I know everyone out there is like, okay, Logan, you kind of stated some things along the way that have been nice trades, but what do we do now? So, the what do we do now situation is this. If you're in the den and you're looking at TFNN on an iPhone or on your computer, I'm showing right now something that's really, really important on trading the euro. We have a very wide short-term profile here that just goes, the top of the box is basically in that 112.25 area. That was the maximum resistance on the intermediate trade down, kind of the breakdown area, if you will, in the euro. And the unfair lows are at 109.84. What does all that mean? If you go into our scanner, which we have on the TFNN network, we're going to talk a lot about this today. We're going to go into our Forex section of the scanner, and we're going to go down to our EUR USD cross area right there. And we're going to be able to see these inflection points as we mouse over this product, or as we mouse over some of these cells to the right. We're going to be able to see top, bottom, POC on 4 different time frames. And what I'm looking at right now is our 240-minute profile, unfair highs and unfair lows. These are the maximum high areas and low areas of what we call the balanced area. So on a short-term time frame, we've got a very wide profile. It's very uncharacteristic to be this wide on the euro on a 240-minute time frame. So what does that mean? That means that when we are within this balanced area, we've got a relatively volatile product. And that volatile product could be in a 250 pip range and still be in what's called the so-called balanced area for this product. Now, if we look down the line on a longer-term basis, we've got, let's go to our weekly. We've got 109.48 on our weekly unfair lows, which we bounced off of this morning. And then we've got 110.91. All right, now 110.91 is within that 240-minute balanced area range. So all things considered, looking forward, we know we're going to have some volatile times. I'm not the guy who discovered that the euro might be volatile right now. But we're looking at 110.91 as an area that, in my opinion, stops have to be oriented above that area on the short side. We're trying to stay with this trade on the short side. We may have a little bit of a relief move up if there's some, talks that end up unfolding in the positive area for Greece. But all things considered, this product's got a lot more problems than just the Greece situation. So I fully believe over the long run, we're probably going to revisit those 104 areas and even lower on the euro, probably par. But there's no sense in suffering through a massive run up in the euro on the short term or intermediate term, in my view. If we can stop ourselves out, either sell higher resistance points or go ahead and sell breakdowns as they happen along the way. I'm going to go back to our daily view here, and we're going to cover a little bit more of this on the euro after we come back from our first break. Thanks, guys. We'll be right back.